The cybersecurity industry has been one of my favorite industries to recommend to investors. I've liked the competitive dynamics, the need from buyers, the increased regulatory scrutiny forcing publicly traded companies to adopt better cybersecurity measures, all has led to attractive situations for cybersecurity stock investors. But which one is the best cybersecurity stock to buy? Well, I'm going to compare five of them here in this video: Sentinel One, Palo Alto Networks, CrowdStrike, Fortinet, and Okta. I'm going to look at their revenue growth, their returns on investor capital, and then I'm going to share with you my proprietary discounted cash flow valuations for each five of these companies. And then we'll also look at valuation on a forward price to earnings basis, and then come to the conclusion on which one I think is the best cybersecurity stock to buy right now for long-term investors. Let's dive in. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now. So let's start with the revenue. Okay. And looking at the revenue chart here, a couple of things stand out to me. Number one, Palo Alto Networks is the clear leader in terms of total revenue, generated at $8.9 billion in the most recently updated trailing 12-month period. Second place is Fortinet at $6.1 billion. Then you have CrowdStrike at $4.1 billion, followed by Okta at $2.7 billion, and the smallest of them all, Sentinel One, at $900 million on a trailing 12-month period. So you have big differences in total revenue for these companies. But I also want to look at growth. And when we look at the descriptions below here, we get the compounded annual growth rates for these five companies. Palo Alto Networks demonstrated 23.7% compounded annual revenue growth between 2019 and 2025. Meanwhile, Sentinel One generated an important and impressive 74.5% growth in that same time. CrowdStrike at 51%, Fortinet at 22%, and Okta at 34%. Notably, these are all impressive revenue growth rates between these time periods. Okay. This, of course, included the time period during the COVID-19 pandemic, the lockdowns, the economic reopening, the inflationary surge, and all of those headwinds and tailwinds that were experienced during that time. Very few industries have demonstrated this kind of consistent growth in this time period, right? There's been more volatility in other industries. Cybersecurity has been one of the relatively strong performers, both going into and coming out of the pandemic. The next thing I wanted to compare these companies on is their returns on investor capital, or returns on invested capital, I should say. And a couple of things stand out to me here as well. Number one is Fortinet has the best in class return on invested capital at 23%, and that's up from around 18.5% in 2021. So Fortinet has the best number and is also demonstrating positive growth. Those are two good signs for Fortinet. Another thing I see is Sentinel One is the worst in terms of the return on invested capital, the actual number. But the trend, it's improving nicely for Sentinel One, all except this most recent trailing 12-month period. The company had demonstrated nice improvement from negative 96% all the way to negative 20%. And then in the most recent trailing 12-month period, that trend line reversed. That's an unattractive feature there. The company having the worst number is understandable, given that it also is generating the lowest total revenue figures. It's also generating the best revenue growth. So if the company continues growing revenue at the rates it's been growing revenue, in a few years' time, I wouldn't be surprised if these numbers turn positive. The cybersecurity industry is an attractive industry in terms of profitability. The next thing to note here is Okta is demonstrating improvement, going from negative 17% in 2021 all the way up to positive 0.2% in the most recent period. So excellent growth there for Okta turning positive. Okay, CrowdStrike, A bit of a mixed result here. CrowdStrike was negative 12% in 2021, had improved to 0.4% before declining to negative 7.2% in the most recent trailing 12-month period. Of course, one of the bigger headwinds for CrowdStrike was that massive outage that it caused and the ensuing costs and headwinds it had to face as a result of those outages. So those were headwinds, and we're starting to see those headwinds playing out here in the company's figures. Palo Alto Networks, interesting developments for them as well, going from negative 4.1% all the way to 13.3% before declining back down to 4.7% in the most recent trailing 12-month period. The headwind for Palo Alto's margins is a change in strategy. I reported on this, I believe it was a year and a half, maybe 2 years ago, when Palo Alto Networks told investors they were going to take a different strategy to try and gain market share. What they were going to do is tell all of their potential clients to join them. And if they had an existing contract with another cybersecurity provider, they wouldn't have to pay Palo Alto Networks as long as they were paying the other provider. So, for example, if let's say a client was interested in joining Palo Alto Networks, but they had an 8-month contract left with another provider, Palo Alto Networks would tell that customer, you don't have to pay us for 8 months. So you can join us. We will provide you the services. You can be onboarded completely. You won't have to pay us for 8 months. Okay. So that strategy has worked for Palo Alto Networks, attracting customers, thankfully, but it's also hurt its margins because it's providing those services without generating revenue in return for those services. I expect this will turn around for Palo Alto Networks as well in the long term. By the way, I'm getting these cool charts from fiscal.ai. There's a link in the description for their services. You get a discount if you use my affiliate link to join their service. All right, so now let's start with valuation. And I'm going to look at the forward price to earnings ratio to value these cybersecurity companies. The most expensive here is CrowdStrike at a forward PE of 123. Then you have SentinelOne at a forward PE of 75, followed by Palo Alto Networks at 54. Fortinet at 41, and OKTA is the cheapest at a forward PE of 28. But I also like to look at valuation using my proprietary discounted cash flow metric. And according to this calculation, let's start with Fortinet stock here. The intrinsic value for Fortinet I calculated is $95. The current market price is $103. So Fortinet looks fairly valued according to my DCF calculation. The next one here is OKTA, and my intrinsic value calculation is for $156, and the current market price is $91. So OKTA stock looks undervalued significantly according to my calculations. Then we have SentinelOne, which I calculated a intrinsic value per share for the business at $42, current market price at $18. So SentinelOne looks significantly undervalued as well according to my DCF calculation. We move on to CrowdStrike, where I calculated an intrinsic value per share of $280. The current market price is $470, so CrowdStrike looks overvalued. And last but not least, Palo Alto Networks, the intrinsic value at $128, current market price of $192. Palo Alto Networks stock also looks overvalued according to my proprietary discounted cash flow valuation. But when I looked at the forward PE multiple, Palo Alto Networks stock looked fairly valued. So I get a mixed figure on valuation with Palo Alto Networks, but with CrowdStrike, I get two confirmations and two metrics that point to the stock being overvalued. In fact, out of all of these 5 companies I reviewed today, CrowdStrike is the only one of the cybersecurity stocks that I do not have rated as a buy. The other 4 I do have rated as a buy in my investing spreadsheet. So if I were to pick one of these 5 to buy today, which one would be my top cybersecurity stock to buy right now? I'm going to go with OKTA. Okta has done a good job in generating revenue growth, right? We looked at its revenue growth at a compounded annual growth rate of 34% since 2019. That's excellent revenue growth, combined with a solid trend line improvement in its return on invested capital, from negative 17% to 0.2%. It's the only one of the companies that's demonstrated consistent improvement in this metric. The others have had ups and downs. OKTA has been straight improvement, even though the actual number is not as good as Fortinet's. It is demonstrating a solid straight line improvement, which I do appreciate. And then valuation, Okta is trading at the cheapest forward PE multiple at 28. And then when I calculated the valuation on my proprietary framework, it also looked undervalued by a significant margin. So all things point me to rating Okta as the best of these 5 cybersecurity stocks to buy right now. Hey everyone, I'm excited to announce that my book is finally available for sale. I've been working on it for more than a year now, so I'm really excited to finally share this with you now. It goes through my framework for evaluating stocks. Some of you often ask why I like this stock or why I like the other stock, and this framework provides you the things that I look at when I'm evaluating stocks. I've added the link in the description below.